Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with a scenario that I saw in Discord earlier today, posted by a Thought Drifter, where we have a wave 1, 2 in yellow, followed by a orange 1, 2, 3, 4, 5, finishing the yellow 3, and then eventually looking for another 4 and 5 in yellow. Now my colors are a little bit different, but the scenario is the same. We have a wave 1 and a wave 2 in blue, followed by a wave 3, 4, and a wave 5, and then inside this wave 3 we are looking for an impulse in a 1, 2, 3, 4, 5. Now wave 3 in an impulse is not allowed to be the shortest wave, but that rule has already been met because a trend-based sub-extension from the low to the high of 1 to the low of 2 will show you that this wave 3 is longer than the 1 to 1, meaning this move to the upside is longer than this move to the upside. So 3 is longer than wave 1, and that is also what we like to see. For this wave 4, we are then looking for a retracement in the 0.236 to the 0.5 area, which is taken from the low of 2 to the high of 3. And currently, because we touched the 38205 area, I only have these two on my chart, giving an area between 66.1k and 65.7k. The invalidation for this wave 4 is the 0.618 at 65.4k. We then want to see an impulsive structure to the upside, and we do have some resistance above us as well. The blue box here sitting between 68.2k and 69.2k, which could also be nice for a bit of a retracement in 4, move up in 5, and then get a bigger retracement to the downside in the green wave 2, because inside the green wave 1, we then have a blue 1, 2, 3, 4, 5, following up with a 3-wave move to the downside in 2, before then the bigger impulse to the upside. So this structure over here will then cause price to continue the range between 60 and 74k for a little bit longer before we then eventually look for a breakout towards the upside. And this scenario is quite interesting also with regards to the volume. Of course, volume is pretty flat over here as price is ranging to the upside. We do have a bit of a bump sometimes, but in the very bullish scenario, which is the 1112, we do eventually really want to see volume coming in and price moving vertically to the upside. So in a 1112 scenario, we are looking for a 1, 2, 1, 2, 1, 2, and then a big move to the upside in a wave 3, not continuing the range, but instead gunning for the highs. In this most bullish scenario, we have our wave 1, 2, 1, 2, 1, 2 as mentioned, where the first wave 2 retraced to the 0.382, a less common target for a wave 2, but a target nonetheless. The 0.5 over here is a common target for a wave 2, taken from the low to the high of the blue 1. And if we then look at another 1, 2, 1, 2, 3, 4, 5, finished wide 1, looking for this wide 2 here, then the common target area is the white box between the 0.5 and the 0.786 Fibonacci, taken from the low to the high of this wave 1, giving you a target area between 65.7k and 64.8k. The 0.382 again is an uncommon target, and we just missed out on hitting the 0.5, so there's of course at least some probability to still move down. As explained earlier in the live stream, we have the potential for a 5-wave move down, an ABC to the upside in a flat, and then another move to the downside. However, we did touch the 886 over here and another one here. I have the folder coming up to show you as well. Let me actually just put it on the chart. So we had a move down, move up, touch the 886 as mentioned. Any structure after that 886 touch will have a higher probability of being corrective, increasing probabilities to take this high sooner or later. But now we also touched this 886, taken from the high to the low that we have over here, which therefore again increases the probabilities to take this high sooner or later, either directly or first moving down, because this can be the low of 2 for then another wave 1, 2, and then a 3 to the upside, because we did hit the target area. Even though it's not the common target area, it is a target nonetheless, so we have to keep it in mind. And if price does move to the downside, probabilities are much higher that this is a wave C or a wave Y, which increases the probabilities for price to move back towards the upside after, because we touched the 886. So it just gives a better opportunity if we can look for some proof of support in this particular area. Now, of course, we always need a bearish scenario as an Elliott Wave analyst, but this one is not pretty for 3 main reasons. This is a flat, and then it is an expanding flat as wave B moved to the 1.618, which is an uncommon target for wave B taken from the high to the low of wave A. And then we want to see an impulsive C to the upside. So we have a 3 wave A, 3 wave B in a zigzag for then an ABC 535. And then we want to see an impulsive structure to the downside where the common target area for your wave C is between the two 1.618s. The one is taken with a trend-based Fib extension from the high to the low of A to the high of B, and the other one is a normal Fibonacci taken from the low of A to the high of B, giving you a target area between 63.1K and 60.3K. Another problem here, however, is the time. So we have to compare this wave 1 with a flat in wave 2, as this expanding flat is a wave 2 structure in this particular scenario, but it is very, very big in time. Now, most commonly a wave 2 is ending between the 382 and the 4 Fib time, which is already long, but the 5 is really reducing probabilities for a wave 2, and now we are still ranging and we are at the 10 Fib time, which significantly reduces the probabilities for this particular scenario and therefore increases the probabilities for the bullish scenario. Other than this scenario, it is very difficult to end a structure here and look for a bigger retracement. Of course, previously we had the potential diagonal here for then a wave 1, 2, 3, 4, 5, but because wave 5 is longer than wave 3, that one is now invalidated, which pretty much leaves this, but it is not pretty. On the 15-minute time frame, when we look at the CVD divergences, we have some divergences here. We have some bullish CVD divergences, higher low in price, lower low on the CVD, but one pivot is on the left of the recent high and one pivot is on the right of the recent high, and I do prefer to keep an eye on what is happening on the right side of the recent high. And we had some bullish CVD divergences here which already played out as price took this high, and we just now had some bearish CVD divergences, price moving towards the downside, and the target for these bearish CVD divergences here are these lows, right? So the moment price takes this low here, the bearish CVD divergences have played out. So if we then look at the probabilities of the different scenarios, then pretty much on the 15-minute time frame here, looking at this structure to the upside, the probabilities are higher to take these highs sooner or later. We have 2 886 touches here, and any move now towards the downside has a higher probability of being a wave C or a wave Y, which therefore increases the probabilities to then move back up at a later stage. So because we touched the 886, we're either looking for price to move towards the upside directly or move down and then move up later to hit that resistance up here and then observe what price is gonna do. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.